Good morning, traders, and welcome to our broadcast for January the 21st, 2008. I am Joanne with Succeed in Forex, and we hope you have a wonderful, profitable trading week. The headlines out of Switzerland this morning are reading, stock markets decline, U.S. dollar rises, and U.S. markets are closed today. The U.S. markets are closed today in observance of Martin Luther King Jr. holiday. The U.S. dollar gained some ground in early trading this morning after the S&P 500 lost approximately 6% on Friday. The University of Michigan Consumer Sentiment Index for January came out at 80.5, better than in December at 75.5. President Bush outlined a fiscal stimulus package that includes income tax breaks across the board for individuals and businesses. Most of us are feeling that this is too little, too late. The Fed continues to eye the downside risk to economic growth and has reiterated that it will take action when necessary to counter any slowdown. All of the Asian markets today closed down, including India, with the Nike dropping a 3.9% on slowing exports as Japan has to cope with a slowing global economic outlook. The Bank of Japan is expected to keep interest rates steady. The yen continues to strengthen against the dollar, trading as strong as 106.10 in early trading. In the Asian session, the dollar was generally stronger except against the yen, and they are saying that the reasons for this are debatable. The Australian dollar fell to 87.22, and the euro dollar slid to 145.24 in quiet trading. As we mentioned before, on Friday, the University of Michigan Consumer Sentiment Index for January jumped to 80.5 from December's prior 75.5. This unexpected rebound in U.S. consumer sentiment was credited to lower interest rates as well as decreasing prices, which helped support the sale of household goods. Also, President Bush's fiscal stimulus package provided an outline saying it should amount to roughly 1% of the GDP and included income tax rebates for individuals and tax breaks for businesses. The light trading conditions due to the U.S. holiday, Martin Luther King Jr. Day, curtailed real position building. Japanese leading indicators and coincidence index both came in line with expectations. The Bank of Japan ends its two-day board meeting tomorrow and will most probably keep rates on hold at 50%. The Bank of Japan's monthly report will likely highlight the downside risk to the Japanese economic outlook. The yen should remain firm as global risk aversion and general market uncertainty persist. No major events or data releases are scheduled today in Europe or the U.S. The dollar continued to find a firm footing in the European session as risk aversion clearly became the core market driver. The euro dollar slid to 144.57. The European equities markets are currently following the Asian equity markets. As we mentioned earlier, the Nike closed down by approximately 3.9%, and also metals and crude are lower. The market sentiment seems to be that any G10 decoupling from the dollar is highly unlikely, and this theme is pushing the markets lower. The Swiss December PPI surprised markets with figures softer than expected at 3%. The weaker figure was due to lower import prices. However, the Swissy was unmoved, as the risk sentiment is a greater determinant than the fundamentals right now. The European Central Bank's Executive Board member Stark said that the central bank expects growth to around 2% and remains to raise rates should inflation levels increase. 2 weeks ago, they were saying that they would possibly raise rates. Last week, we had one of the members that became very dovish and said, no, we may cut rates, which caused the euro to drop like a rock, and which 100% from that drop. And now we're back to hawkish comments again, saying there's a possibility of raising rates. All I can say at this point is just be very careful of unsolicited comments from the European Central Bank members at this point. Stark commented, and I quote, "I want to repeat what we have said, that we will do what is needed to avoid so-called second-round effects. We are ready to act," unquote. This concludes our news for today. We hope you are finding it beneficial and that it can help you in your trading day. We would also like to invite you to join us at our website at www.succeedinforex.com. There you can find information about our training center where we help traders to succeed in Forex, and also a link to our Yahoo forum, which is also Succeed in Forex. We hope that we will see you there soon.